Hey traders, hope everybody is enjoying the rally. We've rallied 175 points off of the timing signal turning green, and I think that's just about it. A couple days ago, I wrote on the blog about that I thought it was time to take some profits. Well, now I definitely think it's time to take some profits. Now, I just want to recap something, kind of clarify my thoughts in terms of how you're interpreting it. When you have a timing signal, you've got the entry, and then you've got two exits. You've got one exit, meaning take some profits, set your stops. But you also have another exit in terms of the signal actually flipping, giving a sell signal per se. But then you know, just because you get a sell signal, that doesn't necessarily mean go short. That just means that it's not advantageous to remain long, because you're going to possibly forfeit some of these gains that you've worked so hard to accrue. And so you've got this scenario. So right now, I believe is a time to be exiting your longs. Like I took the gains in SWI today. I believe it was up like 8%, and I just got out. I think the markets are going to pull back anywhere from 8 to 12%, and then when that happens, we'll see where we stand in terms of the timing signal. But right now, I think now is the time to get defensive, just by going onto the sidelines. It's not time to short, not by any means. I think that these markets could potentially move higher, but corrections can come in swift, and you don't want to get caught. You don't want to give up your gains in this kind of a market environment. There's so many things that can happen. I've got three charts that I think are going to illustrate a short-term top, very clearly. The first one is copper. It's a barometer of the market. I had discussed the possibilities of us moving back to this resistance area last week, and we're just about there. I think that we're going to run into difficulties moving past this. Another chart is the Dow. You can see here with this trend line, here it provided support, here it provided resistance, and we're right back there. Yeah, we closed above it, but this is a weekly chart here, so it doesn't really mean anything unless it closes above on a weekly basis. This will be a key chart to watch to see if we do close above it on tomorrow. But volume, I mean, if you just look at this chart from a price volume, you have this big move down. This is a cause for concern, in my opinion. Massive volume on the downside, lowered volume each consecutive week. And while I remain open to the possibility that we can go back up here, touch these previous highs of last year, and potentially move beyond them, I'm not closed to that scenario. Right now, my timing signal is bullish. I have to honor that. I can either be long, I can be on the sidelines. Right now, I think the time is to be on the sidelines, and I'll be issuing an alert to those of you who are on my newsletter, the free newsletter that I offer. The only way you can get on it right at this moment, I'm having problems with GetResponse, is if you go to www.zentrader.net. And then there's just an opt-in form. You can enter your name and email. I don't have that opt-in form on my blog right now. That's zentrader.net. You get on that, you'll be the first notified when the signal does indeed switch to a sell. But I want to get to this last chart. And you can see I didn't finish this trend line. This is a chart I had previously saved. But you can see this down trending line. We're just right there, right at resistance, and we got there very fast. That's what's troubling, is because we've basically shot straight up there with no self-correcting. So be careful out there on the long side right now.